European stock markets soared to new heights on Wednesday, October 8, 2025, marking a day that will be remembered by investors and analysts alike. The energy on trading floors across the continent was palpable, as news of the rally spread rapidly through financial districts from Paris to Milan. The STOXX 600 index, a key benchmark that tracks 600 of Europe's largest and most influential companies, surged to a new all-time high, breaking previous records and setting a fresh benchmark for the region. On this remarkable day, the index rose by 0.5%, a seemingly modest gain, but one that translates into billions of euros in added market value. This uptick reflects the collective strength and performance of leading European firms. Major markets in the UK and Germany also posted impressive gains, each climbing about 0.3%. These increases helped spread a wave of optimism and confidence throughout the continent, reinforcing Europe's position as a global financial powerhouse. The surge was largely fueled by robust performances in the banking and steel sectors, which saw significant growth thanks to strong earnings reports and renewed demand for industrial materials. These gains more than offset ongoing challenges in other areas, such as the automotive and technology sectors, which have faced headwinds from supply chain disruptions and shifting consumer trends. The overall upward momentum signals renewed investor confidence in Europe's economic outlook, suggesting that many believe the region is on a path towards sustained growth and stability. When companies perform well, they tend to hire more employees, invest in new projects, and contribute to the broader economy's expansion. This creates a positive cycle that benefits workers, businesses, and communities alike. A record high isn't just good news for traders and investors. It's a sign of stability, opportunity, and potential prosperity for millions of people across Europe. Such milestones are the result of a mix of positive economic news, strong corporate earnings, and momentum across a wide range of industries, from manufacturing to services. The health of the stock market often mirrors the broader economy's strength, acting as a barometer for business confidence and future growth prospects. This day's rally is a clear example of how interconnected sectors, like finance, industry, and services, can work together to lift the entire market, creating a ripple effect that touches every corner of the economy. For Europe, this milestone was more than just a number. It was a powerful symbol of growing confidence, resilience, and the region's ability to adapt and thrive in a changing world. Steelmakers stole the spotlight this week, capturing the attention of both industry insiders and global investors. The European Commission made headlines by proposing a bold move, slashing tax-free steel import quotas by nearly half, a decision that sent ripples through the market. This proposal acts as a protective shield for local producers, making imported steel more expensive and giving a significant boost to European giants like ArcelorMittal, ThyssenKrupp, and SSAB, who have long advocated for fairer competition. Investors wasted no time reacting. ThyssenKrupp's stock surged nearly 5% in a single day, while Aperam climbed almost 4%, reflecting renewed confidence in the sector. ArcelorMittal and SSAB also enjoyed strong gains, as traders celebrated the prospect of a more level playing field for European steelmakers. These are major leaps, signaling a dramatic shift in the industry's outlook and hinting at a possible resurgence for European manufacturing. It's a clear example of how government policy can spark immediate and powerful market reactions, influencing not just stock prices but also long-term business strategies. Trade rules and tariffs have the power to change the fate of entire sectors overnight, reshaping supply chains and altering the competitive landscape for years to come. For European steel, this proposal was nothing short of a game-changer, fueling investor optimism and sparking conversations about the future of the continent's industrial base. The surge in stock prices demonstrated the power of local policy in a globalized world, where decisions made in Brussels can echo across continents. Domestic industries, often thought to be at the mercy of global trends, can still be protected and promoted through smart, decisive regulation and government support. The steel sector's rally was a testament to the impact of decisive government action, reminding us that policy decisions can shape the future of entire industries. Banks were another driving force behind Europe's market rally. The banking index rose nearly 1%, signaling robust health in the financial sector. Strong banks mean active lending and confidence in economic growth. Major players like Lloyds, Societe Generale, and BPR Banca all saw their shares climb. This wasn't just a win for one country. It was a pan-European trend. Bank stocks often rise on expectations of stable or slightly higher interest rates, which boost profits. Their gains provided a solid foundation for the market's record day. When banks do well, their influence ripples across the market, offsetting weaker sectors. The sector's strength helped balance losses in autos and tech. This diversity is key. One sector's success can lift the whole market. The banking rally underscored the importance of financial stability. It was a reminder that strong banks are central to market growth. France's stock market joined the rally, with the CAC 40 up 0.6%. This uptick was a welcome change for investors who have been navigating a turbulent year. But politics played a big role, as it often does in market performance. Investors are closely watching the government's budget negotiations, fearing instability or a snap election. The stakes are high, and any sign of discord can send ripples through the market. On this day, comments from caretaker Prime Minister Sébastien Lecornu hinted at a possible budget deal, calming nerves. His reassurances provided a much-needed sense of stability. This optimism reduced the risk of political chaos and encouraged buying. Traders responded positively, and the market reflected their renewed confidence. Yet, France's market has lagged behind Europe in 2025, up only about 8% versus double-digit gains elsewhere. This underperformance highlights the unique challenges France faces. Ongoing political uncertainty has weighed on performance all year. Investors are wary, and this caution is reflected in the market's sluggish growth. A single day's gain is welcome, but lasting improvement depends on political stability. Without it, the market's gains could be short-lived. The market's sensitivity to headlines shows how politics and finance are intertwined. Every statement, every policy change can have immediate and significant impacts. Investors crave certainty, and even small reassurances can move markets. The desire for stability is a constant in the financial world. For France, resolving political issues is key to catching up with its neighbors. The country's economic future is closely tied to its political landscape. The day's rally was a reminder. Politics can make or break market momentum. Investors will continue to watch closely, hoping for more days like this. While banks and steel soared, automakers struggled. The sector fell 2.3%, led by BMW's profit warning. BMW slashed its 2025 outlook, citing U.S. tariffs and slowing sales in China, two critical markets. The result: BMW's stock plunged nearly 9% in a single day. The shockwave hit rivals too. Mercedes-Benz dropped 3.6% as investors feared broader industry troubles. This highlights how global trade tensions and economic slowdowns can quickly hurt European companies. The auto sector's pain contrasted sharply with the market's overall optimism. It was a stark reminder of the risks facing global industries. A single company's warning can drag down an entire sector. For automakers, international uncertainty remains a major challenge. The day's losses showed how quickly fortunes can change. Even in a strong market, some sectors face tough roads ahead. Tech stocks slipped, with the sector down 0.4% as chipmakers faced new U.S. political pressure. U.S. lawmakers pushed for stricter bans on selling chipmaking equipment to China, threatening a key market for European firms like ASML. ASML's shares fell 2.65%, and ASM International also dipped. Investors fear expanded restrictions could slash sales and profits. This is a clear case of geopolitics shaking up business. The U.S.-China tech rivalry is creating uncertainty for European companies caught in the crossfire. Navigating these global tensions is now as crucial as innovation. The market's reaction showed just how sensitive tech stocks are to international policy shifts. For Europe's chip industry, political risks are as real as technical ones. The day's dip was a warning. Global politics can hit the bottom line fast. Not all the day's headlines were about sectors. Some individual companies shined. InvestiCore, a Belgian materials tech firm, jumped 5.3% after announcing plans to sell its gold inventory. The sale will free up over $400 million, giving the company cash to invest or return to shareholders. Investors cheered the move as smart financial management. It's a reminder that strategic decisions, not just new products, can unlock value. InvestiCore's surge showed how proactive leadership can win market favor. Even on a day of broad trends, individual actions matter. The company's bold steps set it apart from the crowd. Sometimes a single announcement can make all the difference. Some companies stumbled despite the market's highs. Unite Group, the UK's top student housing provider, saw its stock plunge nearly 7% after reporting weaker-than-expected rental growth. Investors quickly sold off, disappointed by the miss. This is a classic case of how failing to meet expectations can trigger sharp losses. Even in a strong market, individual results matter. Company-specific news can outweigh broader trends. For Unite Group, a single earnings report turned a good day into a tough one. What does all this mean for everyday investors? The market is complex, with winners and losers moving side by side. A record high signals confidence, but sector struggles show the need for diversification. If you'd only invested in BMW or Unite Group, you'd have lost money. Broad funds tracking the StoxX 600 would have gained. News and world events, like trade policies or political headlines, can move markets instantly. Staying informed helps you understand your investments' ups and downs. One day's results are just a snapshot. Long-term planning is key. Patience and consistency usually win out over reacting to daily swings. The real story is how trends play out over time. Understanding these forces is the first step to confident investing.